I want to move like a step away from you and your leadership to kind of column in the industry that you sit in. You've said to me before about the money supply chain problem. I didn't really have a good question following up other than, can you expand on this? I Googled money supply chain problem. Fuck all. So can you expand on this? What is the money supply chain problem and why is it important?
Yeah, so maybe it's helpful to start. I realize we actually haven't talked about what Column did. And so I can maybe talk about, before I handle that, like what we do. And I think maybe that can lead into this next question, right? So at Column, what we are is we're a bank that directly offers APIs to anyone from developers, enterprises to move, hold, and lend money. And we can do that because we're a regulated bank. Prior to Column, let's make a little history here. Any business that wanted to offer financial services, whether it's a startup that's rethinking credit cards or a Fortune 50 company that's reimagining their payment systems or something, they had to work with this kind of all of these archaic middleware providers that wrap this old school bank. So do something as like, move money between two bank accounts. The developer would have to work with maybe a dozen vendors and write like a shit ton of spaghetti code. It was kind of a mess, but it existed this way for decades, because no matter how many times you rethink or you rebuild the technology into something slightly better, you actually aren't fixing the fundamental problem, which is the financial institution itself, the bank. Because what you're doing is you're building outside this regulatory perimeter. And so no matter what, you're kind of putting that lipstick on. You actually don't fundamentally control the protocol and you don't control the risk decisions at the bank. And so you can never actually truly reimagine what it looks like. And so what you end up doing is you keep just adding more middleware providers. So what we did is, we went out and we actually bought a bank, took on that regulatory heft. And we think that's really the only way to actually truly innovate in financial services. So kind of going back to your question, which is, okay, what is that money supply chain? How do you solve that? Which is, let's take a look at like a traditional supply chain problem, right? So take whatever t-shirt you're wearing, right? So say you're wearing some Hanes shirt. Maybe you got that thread from India. They assemble it somewhat in Vietnam. They ship it over to China. They make your t-shirt, goes through a port in Germany. And now you can buy it at Target and it's a Hanes branded shirt. Everybody thinks, oh, cool. Like Hanes made this shirt. Actually, not really. There was like probably 20 people or 20 different businesses it took to construct that shirt. Money is actually not that different, right? Kind of what I said is, if you want to move money, what happens? In the end, turtles all the ways down, the Fed just moves money from one account to another account. That's actually moving money. But in order for that to actually hit your bank account, it requires a huge amount of intermediaries, because a bank is not a technology company. So let's go to that example. If you want to move that bank account, that money from one bank account to another, you actually need an inordinate amount of bank vendors and middleware providers to do that. Probably 5 to 10 on every single side of the transaction just to move that one thing. The reason is because banks aren't technology companies, right? They are simply just abstractions on top of the Fed. And so how I've really thought about it is, what we are doing is we are simply just solving the supply chain. We're saying there's 20 things to solve this one very basic problem, which is building on top of the Fed. And we're just going to collapse all that in one, and we're going to go straight to the Fed and do it ourselves.
Okay, so you've got Fed and you've got consumer, and then you've got intermediaries in the middle, say 5 each on each side. Yeah.
Yep.
And then with you're saying, hey, let's have Fed and consumer and bring this together and get rid of all intermediaries in the middle.
Exactly.
What do the intermediaries say?
I think there's so many and they're so disparate. I don't know if they have a unified voice. I don't think I've really heard a coherent problem statement yet. I don't think I've heard people say that there was a big industry. I think people have generally resonated with this problem. We're saying like, yeah, actually this is right. Like building inside this regulatory perimeter is correct. I think, if you're a big bank or something, you have so many different domains, right? You are solving a consumer's life from kind of cradle to the grave, right? They're going to offer you your first checking account, but they're also going to do your corporate debt offering when you're a massive corporation. And so I'm not quite sure they totally get how big of a paradigm shift is happening in financial services. But I think probably in 5 years or something like that, when we're a little bit more well known, I think they'll probably speak more with a unified voice.
And so just around, what's the problem? The problem is the fees that the intermediaries bring, because actually the process of moving money I don't know. For me, it's not a problem. I move quite a lot of money. um, like, so what is the problem? Is it the fees? Is it the time to move money? Why is this a problem?
Yeah, I think it's a great question. So I think one, it's around how developers build. I think we are going to get innovation in financial services, both in the US or the EU, Pakistan, or wherever, because people are going to want to build new companies in financial services. And you do that by lowering the barrier to entry. However, anytime you build in financial services, you have to build on top of a bank. And to do this right now, it takes 9, 12, 18 months. It's extremely painful. It's extremely expensive. And you can only probably ship 10% of the products that you want, right? That inhibits a huge amount of growth and innovation. And so what happens is there's two things that happen, right? People just raise a bunch of money and deal with the pain. Or what do? They build outside the regulatory perimeter. They go build crypto exchanges in the Bahamas. They go build crypto exchanges in China, and they go work outside the regulatory perimeter and end up causing a lot of consumer harm. And they end up kind of blowing out because they're building outside the regulatory perimeter. And I think what we're saying actually is there's actually a nice middle ground, which is we can be a bank. We can be that regulated entity. We can make sure everybody's built in a very safe and sound way. But you also get to move super quickly. You could have great developer infrastructure. You get to do that at a really low cost. And that is actually going to have a massive boom in really safe, fast moving, really innovative financial products.
But just so I get it, like the consumer experience problem is then it's an inhibition of product expansion on financial services. Like, what is the problem for the consumer experience that we're solving?
So if you think about our business, right, I do not work with consumers. I do not work with businesses. The only people that we work with are people building new financial services, right? So maybe they're building a neobank. Maybe they're a vertical software company that wants to offer payments and lending to their customers, right? Maybe it's a big enterprise that wants to do treasury management differently. I don't know what the killer consumer product is, right? 10 years ago, it was, Venmo and Square Cash revolutionized peer-to-peer payments. Chime reinvented, Gen Z, Square Cash and Chime reinvented Gen Z neobanking, right? Wealth management went through a big boom, right? There are different sectoral areas that innovate and build in financial services. If I was super smart and I knew what the next thing was, I'd probably be doing that. The only thing is I know is it will happen. And the trick for me is how do you build that plumbing? How do you build that infrastructure? So the next iteration, they can do that faster, better, and cheaper. Because the moment you lower that barrier to entry, consumers just get way more options and way more flexibility. And also they get to do it in a relatively safe and regulated way. Because when you actually build inside the US financial system, you get a lot of inherent protections. And so it's really important that we allow people to build inside of that in a very safe and efficient way. The moment you build outside of it, crazy shit can happen.